evening and welcome back to the Australian Stock Market Show. My quote for tonight comes from Mohinish Habre, an Indian-American businessman who started his own company with $30,000 and sold it around 10 years later for $20 million. He said, "You don't make money when you buy stocks and you don't make money when you sell stocks. You make money by waiting." And these are wise words, and we are encouraging you to be patient and wait while the market confirms the next low, as we believe it will give us a significant opportunity to profit. Tonight, Dale and I, in our no BS approach to all things stock market, are going to share why it's important to continue to wait patiently for the right stocks. Tonight we answered two big questions. Will 2023 provide the opportunity for double-digit gains, and where will the best gains come from? Is it the top 20 or the smaller stocks? Hello, I'm Janine Cox, your host for tonight, and joining me is Dale Gillham, and we're Australia's most trusted stock market educators. Good evening, how are you today?
Well done for saying that name of that dude who did the quote. Like, seriously, I would have just said, this is Alphabet, and here's the quote.
Oh, gee, that's a bit harsh.
Mr. Alphabet, that was a tough one to say.
Well, I must admit, I did actually go to Google and check the pronunciation.
Yeah, no, I'd have just said, thank you, Mr. Alphabet, here's your quote. That was a bad joke. You know where I'm going to be this Saturday?
Where are you? Oh, no, without a question.
We are Geelong, the greatest. Geelong's
You're
in the
going to be on
grand
the
final.
couch. That's where you're going to
And
be.
this time next week we'll be premiers.
Are you having a party by yourself this time?
Party of one, yes.
So that you can yell as loud as you like?
Well, I only have one rule with the football, don't talk.
So does that mean you're going to come in next week and sound like you've got the flu?
Possibly.
Yeah.
Possibly.
I know that one of your cousins will be watching.
Absolutely. She's probably watching tonight as well, so she'll be saying, go Cats.
She thought you were sick the other week when you came on with your husky voice.
Sometimes. Sometimes it's my sense of humour that she says is sick. Anyway, but let's get on with the show now before we do get into our first segment for tonight. Again, we're going to take some live calls on the show, so if you do want to chat to Janine and I can understand that, to ask us a question, then, or that has been on your mind, then this is your opportunity to pick up your phone and call us now. We generally want to support you, so please show your support for us and the show. The number you need to dial is 03 for Melbourne 92909988. That is 03 for Melbourne 92909988. Now, to get things started, the first person to call into the show right now, as normal, will get a free copy of my latest book, Accelerate Your Wealth. It's your money, your choice. So pick up your phone right now and get dialing.
While we wait for you to call, it is the third Tuesday in the month, and this means that we take a look at the world markets. So let's get into the charts.
All right, on your screen right now is... Oh, it's not on your screen right now. It should be on your screen right now. Is the world markets, is the watch list we've got, and that's yearly, isn't it, Janine?
Yes, it's from January. So we've got the Straits Times Industrial Index leading the top of the board there, up 4.25%.
Yep.
Followed closely by India, up 1.5%. And then we've got the FTSE 100 index, which is down 2%. So you can see that across the board, it looks really, everything's in the red pretty much, except for the Straits Times index and the BSC 30. What do you make of all that?
Well, it is interesting. Two Asian markets, but not all the Asian markets. Tokyo's only down 2.67. Nikkei's down only 4.25, as it says there. So the Asian markets are doing not too bad, except for China. Look, seeing Shanghai's down 14.4. So, and the Hang Seng, well, that's down over 20%, as you can see down the bottom there. So big.
And the Nasdaq's actually the leader of the losers at the moment.
It is, but is this more of a product of what's driving each market? Like our market is much more materials and financials, or mining,
definitely,
commodities and financials. The S&P 500 in the US is really heavily driven by tech. And so is that a product of that? Because obviously that's why the Nasdaq's down heavily. That's why the S&P 500's down heavily, because of tech.
Well, seeing you think that you're such a smarty in working all of this out, I'm going to give you one that might throw you a little bit.
Okay,
are you ready for that?
Okay.
Just take a deep breath,
Do I need to hang on to my seat?
Yeah, I think you do. Look, first of all, I was listening to someone talk about how the FTSE or the UK's GDP is actually slowing right down compared to India's GDP, that India is just going to outpace them significantly.
Aren't they saying that's sort of because of Brexit is now really settling in?
Well, I'm not sure if it's just that, but I'm just looking at what happened, and it could be the impact of COVID having an effect and just like a hangover. The Brexit hangover plus the COVID hangover, it's all a bit too much. So if you're looking at the FTSE, it really hasn't gone anywhere, basically. It's just one big sideways market. It's the ugliest looking market that I've ever seen, except for one of the Asian markets.
It is pretty ugly.
Now, I'm just in love with this chart. I mean, let's just have a look at it. Long term, what do you think of that?
It's massive, isn't it? That's just a brilliantly.
So now you tell me what's driving that. So we looked at all the markets in the red, and this one's up.
But India's in a big growth phase, a huge, big expansionary growth phase. I mean, they're picking this. Obviously, they had China in a big growth phase. Now it's for the last few years, it's been India's waiting to catch up.
Yeah.
So you're seeing all of that because where it is positioned in Asia, it's just so close to everything, and obviously with its laws and government and all that sort of stuff, a lot more Western countries would rather deal with India for those sorts of reasons than China necessarily. So, and it's got a massive workforce that's really cheap.
Okay.
I don't know about their call centres. I don't really like talking to them, but everything else is fine.
Right. Looking at the chart, you can see the consolidation looks amazing. We've had this down move of, like 8 months or something.
That's hardly, isn't it? It's just a real
It just looks
blip.
beautiful, doesn't it? So if it continues to hold up above, I'd say around 5,600, 5,500 points. If it holds up above that, this could be really nice moving ahead. If it pulls back strongly below that, then that's when I'd be a bit concerned about the downside, because I was just looking at the weekly chart and you can see there, there's some when it went up here, part of this rise, I think that there's a potential if it was falling heavily to come back to around the 4,400
I think a lot
mark.
of these Asian countries are just going to be taking off in the next 10 years.
Well,
I mean, Vietnam, Taiwan. I mean, obviously there's a China issue there, but I'm talking about Thailand, Malaysia, Indonesia. They're all poised. They're doing so well at the moment.
Well, I think you did pretty well there, actually. I've got to give you points for that.
Okay.
That is it for our thoughts on world markets. Now, it is time to get into our first email for the night.
All right, our first email question is from Sumit, who says, "Hi, Janine and Dale. I just wanted to know your thoughts on A2 milk. From the weekly chart, it looks like it may have stopped falling and started to move up, but would be keen to know your expert opinion on the technical analysis and if it is worth keeping an eye on. Thanks, regards, Sumit."
Well, in answer to his question, I'd say yes, it is worth keeping an eye on. Obviously, ideally, we'd like to see, we'd like to see all the class actions dealt with because that could create further volatility in future. It's a bit of a question mark still, but there's a big gap also on the weekly chart, which looks like it's a bit exposed there. So there's potential for that to just drop back down, and that would be what you'd expect anyway as the stock's moving up. This stepping pattern that we're seeing is ongoing, and it could just continue that pattern as it continues to move up.
Yeah, look, I think investors need to be a little bit more cautious with this now, not like thinking it's just going to repeat what it did up to that all-time high.
Yes.
I think we're not in the same environment right now as what we were back, when whatever that move was right up into the 2020, that huge big move right up into that. This is not going to unfold in the same fashion over the next few years. I'm pretty sure of that.
Yep.
So we just need to be a little bit careful and not sort of get that, wow, it's taken off, I've got to jump into it. So, but look, I do like it at the moment and it's worth having a good look at.
Yeah, I think it's good to have that on the watch list.
All right, Janine, we do have a caller on the line. Welcome to the Australian Stock Market Show. You're on with Janine and Dale. Who have I got on the line?
Hi Dale, I'm Stephen. I've been trying to making a start on my stock trading, and I've got a couple of questions.
Mate, you're very welcome to ask your questions, and congratulations for making the decision to get in the stock market and be a little bit more active. So what's your first question for us?
Yeah, I'd see these messages in the news about your certain stocks, like change in substantial holdings and ceasing to be substantial holders. Are they signs that we need to be worried about, or they're good signs, bad signs?
No, forget about them. Distraction. Janine might have some thoughts, but yeah, we don't really look at that sort of stuff. It's they're really much more of a distraction for you because substantial shareholders change all of the time. So unless it's more of a smaller company, but all the big companies, the top, what did you say, top 50, 100?
Look, I agree with you. The only thing I'd say is that sometimes you can get another company that might have been sniffing around, and if they pull out, then that could be a sign that you need to watch for.
Cool.
But that's, like you say, for those smaller companies.
What's your second question, Stephen?
Oh, just that was mostly it. I was just wondering whether those are good indicators of leaving a stock or getting into it.
Yeah, well, when you get my book, because you're the first caller, so you've won a copy of that. So have a really good read of it and use your highlighter pen and underline a few things because you're going to learn a hell of a lot to get you started and to really, more importantly, starting out in investing and specifically trading, it's always about not losing first and foremost. So if you can do that and minimise the losses, you'll be in the market long enough to gain enough experience to do it well. So just take it slowly at the moment. Look at good stocks and don't follow the herd, but have a good read of the book and, as I said, highlight all the parts. And it's best to read it 3 times because you'll miss so much in the first time, because when you're first reading it, you're reading it from the point of view of you're trying to learn something. But once you've gone through it, you know what's in the book, and then the next time around you'll get more detail, and the third time you get even more detail. So please do that. But that'll get sent out to you this week. So thanks for the call.
Well, that was great. It looks like we have another caller on the line, Dale. Welcome to the Australian Stock Market Show. Who do I have on the line there, please? You with Dale and Janine tonight.
It's Sunny from Perth. How are you doing, guys?
Fantastic, Sunny. Great to have you on the line. And you have a question for us tonight. Would you mind sharing that with us?
Yes, I do. I'm just a little confused about the lithium stock, and the one I'm holding is called CXO.
Yes.
And I got the tip from you guys ages ago, and I bought it. I'm making good profit, and I'm just wondering, should I sell it now or wait longer? Or
Who did you buy it?
You bought that. Did you buy it for the long term or medium term?
Mid-ish, kind of.
Mid-ish. And what price did you buy it at?
88 cents. I had 40 cents before, then I sold it at 80 cents, then I went back again for 88 cents, and I do have some other lithium stocks. I only buy the Australian ones like LTR, CXO, and only Aussie ones, that's it.
Fantastic. Into the lithium.
I got a question for him. When are we getting our part of the profits? Don't we charge 70%?
Let me make $1 million. I will definitely share it.
Just a beer will do, Sonny. A beer will do fine. A case.
No, but
That's okay. So we'll have a go and look at CXO for you now, yep?
Yep, let's get into it. All right, you can see on the screen there we've got Core Lithium. And I don't remember us actually telling people to buy it. So
well, we didn't remember saying buy it. We just said it was good.
it looked good.
Yeah, it looked
so it's
really,
up to
really
them
good.
to choose. But look, I'm glad it's worked out for him, that he's actually made the decision to do
He's
that
bought and sold it
himself.
once, and then he's bought it again.
So he's bought it across this line here. Is that what you're saying?
Well, that's around the 88 cents. So he's either bought it on the dip coming
I thought
down.
he said he got it around 40 cents.
Yeah, he did.
As well.
Then he sold it, and then he bought it in around 88 cents again.
And now he's in profit again.
And he's in profit
Look, I
again.
guess with any of these lithium stocks, the same rule applies. They can head for the downside really quickly. We can see this fall here that occurred from that high all the way to this low here. It's a 46% fall, and that could be repeated, but I wouldn't be too concerned about it unless it took out this low here in September.
I wouldn't be either. I think it looks a really good stock at the moment. Tiny little bit of weakness at the moment, but nothing too much to worry about, I don't think.
Great.
Cool.
All right, before we get into our next email, if you enjoy watching our show, then hit that like button now. Our next email is from Kate. Hi, Janine and Dale. I am a recent graduate of the Wealth Within Diploma course, which has been the best investment I could ever decide to make. Gratitude to you both and the excellent Wealth Within team for the knowledge gained and opportunity to now take control of my financial future. I would greatly value your current view on JHX, please. I do not own the stock, but historically JHX looks to trend nicely and looks like it may be finding some strength so far in September. I am about to jump into some analysis and back testing, so no doubt I'll learn a lot more once that is completed. In the meantime, I'd welcome your thoughts on trading this stock medium to long term for growth. Many thanks, Kate. Well, thank you so much and congratulations on doing the diploma and making that commitment and investment in yourself, and I wish you all the best.
Well, she might still have Trading Essentials service.
Oh,
so
that's
if she's
true.
got that, she can send, if you've still got Trading Essentials service that was part of your course, you can send all your trading plan and all that sort of stuff through to us, and I will personally check it for you.
That's
How's
great,
that?
isn't it?
That's my promise. Don't give it to Janine, she'll leave it for days. So I'll do it for you straight away. But let's answer a question right now anyway.
All right, James Hardy Industries. We've seen a big correction on this one, and obviously the housing, the inflation situation, and the interest rates are taking its toll. And I don't know what's going on there, but it looks like the mouse is playing up. Squeak, squeak. Okay, let's see if I can just grab that thing there.
Sounds like me after a couple of beers.
All right, down about 50%. So often when stocks fall around that sort of level, they can start to make a move back up, but we're not seeing any signs of that happening just yet. So this is not the sort of stock that you'd want to jump in too early on. What are your thoughts on that,
It
Dale?
trends really, really well, doesn't it? I mean, you're seeing this beautiful, nice sort of trend up on the weekly chart. It's beautiful.
Yes.
Move here. It's not one that's going to, take your heart out, or you have a heart attack and you need to have a, lie down, and a couple of aspirins. But I'm agreeing with you. This is a nice move up with our marketplace because the market was bullish. So just be interesting to see what happens through here. If it does start to move up and get through that sort of $40 area, I like it.
Look, I'm sure a lot of people got caught out and surprised with this recent pullback.
Yeah.
So, when you say that it doesn't give people too much of a heart attack, I think that's sort of a degree of fall.
Well, that was COVID. That's a heart attack for anybody.
Well, no, this is COVID over here, so that's
what I mean.
Yeah, but
Yeah.
I mean, even this, the fact that it's just continued to slip like it has and
Well, that's
fallen
just a gentle
50%.
fallback. It's not one
It's
that's
50%. It's not
Correct.
something to sniff at.
But how many months did that take? All year.
It's not a year at all. It's only about
Since January.
maybe 6 months, if that. But it's not.
Look, put it up the top here. Look at this bar at the top.
I
What
would
does that
suggest-
actually say?
I
That
would
says
suggest
December
that it's done this
2021. That's all
sort of
year.
thing before, because we can see that this sort of fall it's had here is also significant.
plenty of time to get out of it if you've got rules.
Yeah, that's true.
Kate's got rules.
Oh, that's true. She can help herself.
So
can't she?
plenty of time if she was in it to get out of it.
That is
So
a really good
that's what I
point.
mean. Yeah.
So you're happy with someone who's got rules, proper rules to trade this sort of
Absolutely.
stock? But what about
Absolutely.
someone who doesn't have any rules?
I'd say they call you. Why not?
Okay.
I like it, Kate.
Call into the show
Yeah.
if you haven't got any rules. There we go from Dale.
But if you do, as I said, Kate, if you do have trading essentials, just shoot it through to me and I'll have a good look. Once you've come up with your trading strategy a little bit, and I'll help you work on that with that stock anyway. But now we do have a question from Lee who says, hello, Dale and Janine. I would really love to hear your thoughts from a fundamental perspective on Paradigm Biopharmaceuticals, who are using a repurposed drug for the treatment of osteoarthritis. They are undertaking phase 3 trials and have been fast-tracked by the FDA. I invested into this stock in 2017 and plan to hold it long-term. As a single mum to 3 children, I hope my investments in this stock and less risky stocks will help create financial security and generational wealth for my children. Some say this stock has low risk, high reward, although I would love to hear your thoughts on it and what percentage of a portfolio you would be allowing for such a stock. Thanks kindly, Lee.
Would you say the book is going to answer that question?
Yeah, absolutely. My book.
Yeah.
Okay, yeah, well. Firstly, Lee, we're not going to do fundamental analysis on that on the show. We just don't do that. We do fundamental analysis, but that's not the main thing that Janine and I do. We're technical analysis. So Janine's going to have a look at the stock in a minute, aren't you?
I didn't know that you wanted to. I thought it was just a general question that you wanted to
That's not very
discuss.
nice. Lee's a lovely supporter of our show, and you're not even going to look at the stock for it?
Well, look, I didn't know that we were going to, given that we're...
You're the one that wants to look at stocks
But
all the time.
they didn't ask to talk about...
Okay, what about her other questions?
Is it a she or a he?
It's a she, I believe.
Okay.
Of course, she says a mother of 3 children, so
Well,
I'm
there you go.
assuming that's female. But in this non-gender specific, wokey world, I have no idea anymore.
Okay, fantastic. Okay.
So you can have a look. So she's also asked about what sort of percentage you would have of this sort of stock. She also asked if it's some people say it's low risk, high reward. Nothing's low risk, high reward. basically, unless you're in the top 20 stocks, so to speak. But a stock like this, I would say, is more high risk, and I would not necessarily put a stock like this in a portfolio for my children as such. I would be sticking in the top 20 stocks, I reckon.
Well, isn't that enough? I mean, I really think that says it all anyway.
What?
What you've just said.
Thank you.
I don't think we need to say any more.
We'll just show the stock then and just tell you why that's true. Have a look at it.
Look, why that's true is because the volatility is just right out there. It's a high risk share. Why would you bother, I guess, buying a stock that is a low liquid stock like this for a child's investment?
It's high risk, it's not low risk.
Yeah, because you want to buy stocks that you can actually talk to them about and give them really solid reasons for why you're buying. So whenever you buy stocks for children, it's part of their education. It's not, never just think that you're buying something just for an investment. It's got to be both sides of the coin, I think.
Probably the other thing that, I'd say, I totally 100% agree with what you're talking about is she's talking about, the FDA's fast-tracked it. And I go, so what? Because how many times have we heard, it's in final trials and FDA's going to approve it, or they've fast-tracked it and it just blows up.
Yeah.
We've seen that
so
gazillions of times. And the people interested push all that stuff out so people buy the stock and try and support the stock price and push it up. So until
if that was so great, the stock would be rising.
Yeah, correct. And that's really what I was going to say is the people in the know would be pushing that stock up if it was definitely going to get approval or something was going to happen. And for years I went to the microcap conference and I heard CEOs saying the same things to me. And yet watching some of their share prices languish for 4 and 5 years. So
why would you touch it?
Why would you touch it? But anyway. Well, Janine, I think it's time for I think it's time we get into our main topic for tonight. Now, each week I do share my thoughts on the Australian market in my Monday market report here on YouTube, and we also cover it regularly in this live show. So make sure you watch these recordings. Now, you can also see them and other content on our website under the Learning Centre in the navigation. Now, I'm saying this as our thoughts on the potential direction of the broader market really does set the scene for tonight's show.
Exactly right. With the market having been down for more than 12 months, I'm sure that everyone wants to know whether 2023 will be better. So we'll look at this coming year with the aim to see if it will provide the opportunity to generate double-digit gains. We'll then get into the next most important question: will the best opportunities be among the top 20 or on the smaller stocks to get the best return?
Now, I thought we had some pretty hot topics, Janine, in the last couple of weeks, but Janine, once again, you have topped those, I tell you.
Well, it's like this, Dale. This is the sort of discussion that gets everyone thinking about where to direct their funds. We see so many new investors being sucked into thinking they need to focus on lower price stocks, which have low liquidity because they perceive them as having the potential to make the greatest gains.
That's so true, Janine. It's so true. How often do you hear the words, I hear that, good old, slow, boring stocks, make the best gains. How many times have you actually heard that? Now, I agree with you that having an open, frank discussion to challenge people to think has to be really good. Now, to answer whether the top 20 stocks have the best returns, I don't have a long-term memory, Janine. So what do you reckon?
Well, I'm glad that you said that because we don't hear about them. However, we can almost guarantee you will have heard about lower liquidity stocks because vested interests are paid to encourage you to put your money into these shares. So they want you to think it's easier to make money in smaller companies.
Problem is the risk of these shares falling 90% from their highs is greatest with these sorts of shares. And the probability of a successful outcome in many of these shares is really only a few percent, Janine.
So true. What's most interesting is that in some years the market will provide important signals indicating the potential ahead, but it's important to be able to read the signs. What we find is that most investors are unaware these signals even exist because the industry has convinced so many that the stock market is completely random, which is completely the opposite when you know how to analyse a stock, like students and graduates who have studied one of our courses.
Yeah, the stock market's random. Definitely not. Okay, so true, Janine. It is also true that the stock market will at times behave abnormally, 1 in every 4 to 6 years, and the best gains typically occur in 1 or 2 years in that time frame. So it's really important to watch and listen carefully tonight because it may just be 1 or 2 things that we share with you tonight that gives you that aha moment And this will help you get your portfolio set to take advantage of the gains in 2023.
Dale, I think there will be plenty of aha moments for everyone tonight.
Uh-huh. You have a lot of aha moments all the time, don't you?
Yes, I do, especially when I'm seated next to you.
Well, I can understand that. You see, Janine, John Wooden once said, whatever you do in life, surround yourself with smart people who argue with you. Now, I've always surrounded myself with smart people and have had a lot of arguments followed by aha moments.
Now I can see why we argue. You want our viewers to get more of the aha moments.
Uh-huh. You nailed it.
By challenging and arguing, we give more and viewers get more. So it is a win-win. I like that. So let's now get into the charts and see whether history indicates any justification to focus on the smaller stocks, or are the biggest stocks likely to be the best for 2023?
Okay, now on the screen we have a bar chart of the top 20 stock index. The code for that is XTJ, and the chart of the small ordinaries index, and it has a ticket code which is XSO, which is comprised of companies included in the S&P ASX 300 index, but not in the S&P ASX 100 index. So this is a nice simple way of letting everyone see how performance changes over time.
Yes, you are spot on as usual. I've marked some of the dates of major turns and used a line to highlight where they are. So first of all, you can see there the lines on the chart,
Yep.
and the dates,
on the left-hand side.
Disappeared on me. I don't know where they are. They've disappeared. Here we go.
Where are they?
Okay, so you can see the lines on the charts there,
Yeah.
and there's another one there. Okay.
I've got to put my glasses on for
On
this,
the
Jane.
left-hand side of the graph, this is the first one. On the small ordinaries index, you can see where it's actually appears to peak well before the
top 20.
The top 20 does, but they both fell into the low around 2003, so that's 2003 there. Now the XSO peaked early, as we would expect when there is a flight to safety of big stocks. So we can see here that the XSO at times we can see will peak early, but we can also see that around the time of the GFC that they both peaked at the same time, and the lows occurred around the same time. So when coming out of that low, we can see the next high around 2010. There was a peak sort of fairly close, but we can see that after COVID that the low actually occurred here for the small ordinaries well after the low that occurred on the XTJ, and there was this high, so it was completely different to what happened on the small ordinaries index. That's interesting, really, isn't it? And then we've got COVID occurring at the same time, and the XSO has actually fallen steeper than what the top 20 stocks have.
Well, that is really interesting. Now, logically, you would think the smaller stocks would always be sold off first and be last when the market rises.
Yeah, I know. And if the market was behaving normally, it would. The other point to note is from around 2010, the XSO turned down and kept falling until 2016, while the larger stocks stabilised and began to rise as early as 2012. So they definitely do not always move together. And what this indicates is that the small companies are far less reliable for investors, which is what we expected to observe.
Now, viewers have heard us say this time and time again, and so it's good for them to observe for themselves that they are at times when the smaller stocks do behave differently.
Exactly. And now let's consider the percentage gains made from the low in 2003 to the recent high in 2021. Now I've got some rises here. I'll just hide the other ones there on the screen. The top 20 rose 178%. Now can we see that if it's risen? You can see there that the rise into that high there, this is the overall rise. So this was actually the rise from the low in 2003 to the high over here in 2021. That's what we can see for the XTJ, XTL rather, actually I should say. And the small ordinaries index gained 163% over the same period, right? So it's actually less.
Well,
now that really surprised me.
Well, it does surprise me. Now, another interesting point, a lot of people would think that the smaller stocks would outperform. But there really hasn't been a lot of difference with both of these indices. So what else does the chart show us, Janine?
Well, the small ordinaries has so far not traded above the GFC high. So you can see the high here is actually lower than November 2007. But also the performance will depend on where you measure from. From the bottom of the market in 2009, down here, you can see it rose around 109% to its peak in 2010, whereas the top 20 gained just 63%.
Oh, wow. Okay. So it appears that the smaller stocks won in this case, but as mentioned, your perception will depend on your start and end points for that. Now, this changes if you are measuring from the low in 2003. You can see the bigger stocks gained 98% from that low to the high in 2010. Now, also the smaller stock index fell more in the GFC. The XSO fell all the way back down to 2003 low, or to that low, but the bigger stocks did not fall that far. Now, that really does not surprise me how the smaller stocks fell more relative to where they started in 2003. So both indices grew by around the same amount when measured from the 2003 low.
Yeah, which is really interesting. Yes, another surprise for most people, I'd say, and I could see that you're really intrigued by this.
I am. I am. I mean, what happened following the COVID correction?
Well, the top stocks rose around 71% and the small index 102%, but then the XSO fell more in the COVID decline. And it has fallen by around 27% in the recent decline, whereas the top 20 fell by around half of this fall. Okay,
so what's your conclusion, Janine? Which area of the market stands the test of time as the better investment?
The chart doesn't lie and indicates there isn't a great deal of sense for investors to put their capital at much greater risk with the smaller end of the market when you can invest in quality companies.
Okay, I hate to say this, Janine, but I would agree. It really is a foregone conclusion. And as my book says, you can make really good gains simply by investing in top 20 shares.
Dale, I have to agree with you. There isn't much evidence to suggest you'll gain any big advantage being in the small stocks. That's not to say that investors might be lucky and find some that do outperform, because an index is a smoothing down of all stocks in aggregate, but it's not compelling at this point.
So we are both pro top 20 stocks. Therefore, no need to bring out those pink boxing gloves and we have an argument there. But we do appreciate some of you may have a different opinion with us, and we would like to hear your thoughts. So feel free to let us know below in the comments section down there whether you prefer bigger or smaller companies. But I will say that it just makes sense. Well, to me, it just makes sense to trade something more predictable and lower risk than something less predictable with higher risk, especially if it does not get the better return. Now, okay, Janine, I know there's something up your sleeve, so what else have we got?
Well, Dale, I knew you would ask, and yes, there's always more to discuss. Now, let's get into looking at some of the data for a couple of top 20 companies to see if 2023 is likely to be a year for double-digit gains. And we've got some lovely spreadsheets which provide an indication of what we can expect next year. Let's take a look.
Okay, so what are we looking? So we've got BHP.
Yeah,
I see there's 3 tabs on the bottom.
Yeah, I'm going to do CSL first, so I'm not going in alphabetical order.
Damn!
It's healthcare first. So what I've done is I've taken a stock from 3 different sectors. So we're just looking at the first 3. So CSL, CBA and BHP.
Yep.
Okay, so we've got healthcare, we've got banking, and we've got mining.
Yep.
So that's kind of nice, isn't it? We've got the 3 biggest stocks on our market by market capitalisation.
Cool. I'm with
so for the market to go up, these stocks really have to be going up, don't they? That's the theory. So in a very simple way of looking at what could occur, we're picking those stocks to give an indication.
Okay, so what are these graphs telling us? Oh, sorry, these spreadsheets telling us? Because I know we do this all the time.
Yeah, so what's really important is to have a look. This is actually the 1st of January each year that the stock's been trading. So I'll just first quickly scroll down to the bottom of the list. I'm going to use, actually, you've just flicked across, got me to flick to BHP, but I want CSL. Got to go back there.
I cannot tell a lie, it wasn't me.
No, it wasn't. I'm holding the mouse. So look, down at 2022, we can see there that at the moment, for the
yesterday.
As at the year to date, it's actually down 2%. But what's really interesting for me about CSL is the last 3 years.
Yes.
So we're seeing these really out of character movements in this stock, because if you look back up the list, you'll see that generally it has quite significant returns, although we can see there were a couple of years where it was down in here in a row. Yep, followed by 12% up and then 13% down. So it was this period here, which was GFC followed by basically the wake after the GFC and the tsunami. So that was that strange period back then. And then we had 2002, 2003, which was a correction on the market as well.
Our market had March 2002 was a low. Yep.
Correct. Now, you'll notice there was a big correction of 58%. So some of these stocks can sometimes correct more than what the broader market, particularly the financials, will correct. So going up the list, you can see big gains there in a lot of years there, and just scrolling down gently again.
To me, if you're a buy and holder, there is no way known you shouldn't have CSL in your portfolio.
Well, but the problem is that over the last few years, it's actually gone sideways and has been threatening to fall away.
Yeah,
so what if, we've said this on the show before, that not every stock, you should never fall in love with a stock for a start.
Agree.
And buy and holding any stock could mean that you're down significantly. Look at the banks.
Correct.
You know,
agree.
for buy and holders holding big bank stocks.
I'm not saying I do it. I'm just saying people get out there and they buy and hold, and this is one you should have.
I just have to check that you're on the right path here.
I'm always on the right. I'm in front of you all the time.
I thought you were behind me there for a second. You're worrying me.
No, I'm not. I've got your back all the time.
That's great. Thank you for that. All right, so we're looking here and we can see that the last 3 years is strange. So this tells me that there's a probability indicating that we're likely to have good growth the following year. We can't say for sure that's the case. We don't know whether we're going to see more than a 2% decline this year. It could fall back towards the end of the year. We
2-3 years of pretty terrible returns for CSL. You've got to think that it'll return to double-digit returns next year, wouldn't you?
That's what I'm suggesting.
Doesn't have to, but I'd just say, wouldn't it do that? So what else are you going to say on CSL?
So that's CSL, right, for a minute.
Yeah, you aren't you going to scroll down a little bit?
Look, I could show a little bit more.
And just sneak a few little bits and pieces down
So
there.
here, 29 years overall, positive 22, 7 negative, 76% of the time it was actually in a positive return. Average gain 21.58, average loss 18.5. So it's still a big swing in terms of that. CBA, we scroll and have a good look at the list of CBA. We can see obviously the data starts in 1991, which is an interesting time on our market back then, wasn't it? Because we'd come out of the 87 correction, and then there was that big sideways move into and pull back into the early 90s. So.
But again, another stock that you could have just bought and held.
Well, yeah, I mean, a lot of people did get it on the float and have just held on to it, and have done very well. So looking at this one, we can see that there were a couple of years there in that early stage, but remembering that was just a couple of years after, 6 years or so, 7 years after the correction.
Before that was a government bank, so it was a big white elephant for a while.
That's right. And then we've seen really decent returns into 2000, a couple of years around 2001, 2002, which, we saw the same thing on CSL. There was a couple of years around there, 2002, 2003 with negative returns. So that was across the board. And then we've got 5 years of good returns from Commonwealth Bank, and then 51%.
Yep.
That would kill it, wouldn't it?
GFC.
I mean, so the GFC killed it. So every now and again, there will be corrections on our market, and you didn't see Commonwealth Bank and what would have happened.
But look at it in the next year, up 89.
Well, hang on a minute, because we didn't have the benefit of seeing what happened in the 87 crash with this stock.
Correct.
So it doesn't really prepare investors well. Investors probably had no idea that could occur.
Yeah, but at the 87 crash, we could look at ANZ, we could look at Westpac, and we could look at NAB. Yeah. To give us an idea what financial stocks did.
I know we're only talking about growth for next year, but
correct.
At some stage we should have a discussion about, what could happen a few years ahead, 4 or 5 years down the track. Yeah, okay. Because we could see one of those happen again. But 89% the following year. So after a big decline, it just rebounded, and then 2 years of negative growth. Yep. So just really sluggish in 2010. Same sort of thing we saw with Commonwealth Bank. That was the same sort of scenario. You're right. And then 4 years, with positive return, 1% return. Well, you're not going to be happy about that. But let's face it, we had the Royal Commission coming in there.
All the banks did poorly for 5 years.
That's right. And so this happened into 2018. So not great with those 4 years of negative. And now we've seen 3 years of positive and 1 year of negative. Now, it's not abnormal to have 3 years of positive and 1 year of negative.
Yes.
But based on what we've seen, you can't rule out that we don't have another negative year ahead. And that's the tricky thing here. Even though I still think that the market hasn't shown signs that it's going to fall.
Well, the banks really haven't taken off again, have they?
They haven't really.
So therefore, I think they've sort of been held back a little bit. And I think with rising interest rates, banks make more money.
Well, you think so, right? So all the metrics are there to see another big boom.
Yep.
And 1 year negative often means that you could have a positive year the following year. But it depends what's happening in the bigger picture. So, if we've got a bigger picture correction due, which you and I both don't think that that's the case at the moment.
Now.
We think that there could be another 10% downside as the worst case at the moment across the broader market, but let's just wait and see. So let's have a look at BHP.
66% of the time, Commonwealth Bank is up for the year.
Well, that's right. So that's,
now, these figures don't include...
That's a really good point you raised. Yeah, so I've just don't know what I've done with my spreadsheet there.
But these figures don't include dividends either. So
well, that's true.
People need to understand that. So if Commonwealth Bank paid an average, like, say, 4 or 5% dividend...
Yeah.
Or CSL, I'm not sure what dividend you do pays, but these are just raw growth or loss for the year.
Now, of course, we said in our discussion earlier that all returns depend on the date that you draw the line in the sand and look at it.
Yeah.
Because, if you were looking at returns from the peak of the GFC forward, any stock is going to look, poorly because the market's trading at around the level it was during the GFC. But if we're looking back at the 03 low, like I showed you in the example, then the market actually looked quite strong. So it just depends on the time that you draw that start line as to what it looks like. So let's have a look at BHP.
Your favourite stock?
Now, starting from 81, so that's when it listed in 81. So
that's not when it listed, it's when we got data from.
Well, that's right, but it was on the market in 81.
Correct.
Okay, so we're looking at negative returns for the first couple of years. Now, even though it got 124%, which is pretty damn good for 1983, you could say that was a really rough time for BHP in that early phase. And then, of course, the market headed into the peak in 87. There's some really huge gains.
Look at that, it's held right up, no negatives.
But that's surprising. Look, 1% again and then zero the following year, and then 43. I'd have to check that because it just looks odd, doesn't it? You'd expect to see a massive decline there. I used to have a mental image of BHP imprinted on my brain, but because I'm looking across so many stocks these days, I don't remember the early days. But looking at this here, 43% gain in 89, 1990 and 1991 all up. Then we got a small loss in 92. Now, you have to remember that was after the 87 crash. There was that wake again, as we said, with the other stocks.
We bottomed out around 91, 92.
So that actually fared really well in that time there. 1 negative, and then you get 3 years up, and then we get 3 years negative. So that would really disillusion investors to have 3 years of, the losses like that. And then a 79% gain, which is terrific, followed by 5% fall. So highly volatile. BHP is sort of a bit of a different story, isn't it, to the other two. Then we saw 5, 6, 7 years of gains here from that 2001 through to 2007. So that was that big growth period, which I think that we still have that another growth run.
Well, commodity
ahead.
Cycles do run a little bit longer, don't they?
Exactly.
When they're running.
So another rise there. A lot of indications are showing us that could occur again. And then we're seeing 2008 as a negative number. Of course, you'd expect that, and followed by 2 years of gains. A negative. So it's a bit all over the place is what I'm trying to demonstrate here. It's a lot harder to gauge this for BHP. You tend to get a few really good years in a row, which is nice. And then with the commodity cycles, like you say, it corrects again. But so far, it hasn't been hugely negative.
Yeah.
So I'm still on the sidelines about BHP because of the way it's trading at the moment. And I'm thinking there is some risk to the downside in the short term into December this year. So there's still a bit of a question for BHP until then. We should know in about a month or so whether BHP is more likely to rise or fall. So just continue to watch that. But I think that next year is going to be a better year towards the end of the year for a lot of stocks on the market, even if it starts out a bit rough early in the year.
Okay. What else? Is that all?
But I'm
What
expecting good gains for 2023. Are you seeing the same thing?
Well, I do think our market will have better gains in 2023. I think, we've had a rough time with COVID, etc., and then we're getting used to the whole world's getting used to it because COVID is turning out to be more seasonal. You go into India, you get more COVID, and then summer you get less COVID. It's what's happened in the northern hemisphere and it's what's happened here. So,
Yeah.
But I think businesses are getting back to it. Supply chains will slowly work out, and I think around the world, we're making a lot of excuses for things not happening, but eventually people work it out, whatever
right.
it is, and we adjust and adapt. So I think we will get back to it, and where the world is opening up more again, unless people are fearful.
Yeah, so I guess the patterns show that after a couple of years of flat or negative growth, you get a strong growth.
You get that pent-up demand underneath that things have to take off, and if things have been held back for so long, people, eventually, you can't. You're trying to order a new car at the moment; it takes months to get all that sort of stuff. And housing prices are where they are at the moment, coming back a little bit, but you do get that pent-up demand that will eventually explode again. So I think next year will be quite a good
better year.
A much better year than this year, that's for sure.
Yeah. In addition to this review, of course, we would conduct a full analysis of the stock charts and the market index to determine how the market's likely to unfold. This increases the probability of picking stocks at the right time.
I do have to agree with that.
You don't like it, do you?
No, I don't like it. No, I do have to agree with it, but I don't like agreeing with it, but I do like agreeing with it. But that is it for our topic for tonight. Now, before we get into our next email, given you're at this point in the show and still watching this crazy guy and this girl over there, it means that you like what we're doing. So make sure you hit the like button now. Now, I do hope you have your phone ready and been patiently waiting for the opportunity to call into the show to ask Janine and I your most burning questions. And now is the time to get dialing. The number you need to call is 03 9290 9988. That's 03 for Melbourne, 9290 9988. So get dialing now.
While you call us, we will get into answering the next question, so call now. Our next email is from Nathan. Hi Dale and Janine. Can you explain why when looking at the course of sales for any given stock, there are huge numbers of trades of low volume, this often being only a couple of shares? Does it have something to do with automatic trades being done by large institutions to keep their portfolios balanced? As always, thanks for taking the time to help educate us all. Thanks, Nathan. Well, that's a really good observation that he's made. Do you think there's any value in that?
It is. It's a really good observation that he's had. So what are you going to answer him?
Well, look, I just think that, that it doesn't really tell a lot, in my opinion. I just think that it's good to pick these things up so you can see what's going on in the market and understand it.
Yeah, but the course, I know we teach our students how to take on the course of trades, but I know most people are looking at the depth of the market.
There's so much algorithmic trading now.
There's so much algorithmic trading, and you are right when you do see the course of sales, you see all these like little 1 cent basically one stock all the time, or two stocks with all these algorithmic trading, but it really doesn't make. It's nothing you need to be worried about. Like anything to do with the course of sales or even the depth of the market is pretty much next to useless to you. Yeah. It really is pretty much next to useless to you. But
unless you're trying to get a big position into the market.
Yeah, unless you're Janine trying to get in a big position, and a small trade for her is zeros on the end of zeros. From that point of view, but. We do have another email, which is from KM, who says, Hi Dale and Janine, I'm a recent viewer to your YouTube channel and enjoy your informative sessions from Q&A to stock picks and market expertise. I am a precious metals PM bug and looking to invest into mining stocks to gain exposure. I am reviewing the few stocks for the longer term, considering the precious metal miners are being hit hard. My view of the instability across the globe will help gold and precious metals rise longer term. My choices are to speculate are there's a whole list of them: AGG, VM, Northern Star, Newcrest, RRL, Santa Barbara, etc. My two questions: is it better to spread my investment across the above options or focus on one or two? If you had two choices, one or two now. What are your picks and why? Maybe a third question, other picks. I'd appreciate your valuation and picks. Love your show as it gives us common folks context into investing in Australia. Thanks you, KM. Should I send him a bill for our, for our services?
I'm not even going to answer that question. First of all,
we're not getting financial advice.
Just listen to me. I will say that the best thing to do is to get a copy of Dale's book and just understand how you're best to position your portfolio into the market from a risk management perspective, because obviously, having capital allocated, you want to make sure that your risk is spread as evenly as possible. So that's important. It's highlighted in the book as to how you can go about that and what that all means. Really important read. So there's the first point. And the second point is a lot of the stocks that you've picked are quite volatile shares. So there's another consideration there as to what type of portfolio are you running? What sort of a risk criteria have you got? Are those sorts of stocks suited to you, given how they unfold? You just have to bring up a chart of Newcrest mining to understand the sort of volatility that we're talking about. And I actually did pick that. I know you said...
I know that, but we're not going to analyse that many stocks for him and tell him which ones he should be buying today.
No, he knows that. He only said one or two, so I've picked one.
Yeah, but then you have to look at them all to pick one or two.
I did, because I know those stocks, and one of them, the only one I wasn't sure of was AGG, and as soon as I brought that up, it was
crap.
Illiquid, or it wasn't that good, so I just thought, no. Because normally your motto would be pick the first one if we're going to show one, wouldn't it?
Yeah. So anyway, you've answered his question, basically.
So I'm saying, look, I would pick the biggest, most liquid shares of stocks.
And have a good spread across, 8 stocks at least.
Yeah, okay.
Cool, that's what you're looking at. Cool. Well, Janine, we do have a caller on the line. Welcome to the Australian Stock Market Show. You're on with Janine and Dale. Who have I got there?
Hi guys, it's Andrew calling from Sydney.
Oh, fantastic. Welcome to the show, Andrew. You've got a question for us?
I do. I have a question about Intertech Pivot.
Yep.
A stock code IPL. I got into the stock a while ago at around $1.91, and I'm curious about future growth versus diversifying and putting the money elsewhere and selling out and reinvesting somewhere else.
Okay, so is that the only stock you got, or you've got several?
No, I've got several others, but this one I feel like it's kind of at a horizontal pattern now, and I'm wondering if I'm better to redeploy the capital somewhere else.
Okay, so you're wondering whether it should be, it's going to start to pull off and you should be looking to sell that, and that's what you're saying?
Yeah.
Okay, that's easy enough. We can have a bit of a look at that. Do you mind asking me why you bought it in the first place?
I just saw some future growth just around the fertiliser supply chain, and which played out, but I think the growth might have exhausted for the time being.
Oh, fantastic. Well, Janine's got it up now and she'll answer your questions, and I'm sure it'll be a great answer. Thanks.
I think it's a great stock that he's picked. Fantastic choice.
So does he look to start exiting soon and redeploy that money into another stock?
Well, that's interesting, and that would depend on his overall portfolio and what he's got allocated to other shares, really. I think it's got to be a holistic view. If he just had the one share, then I'd be really concerned about
That's why I asked, because he's got a spread of shares, so that's good. So if he had all his money in one share, I'd be worried about that
That's right. So, look, because he has got a spread of shares, I still be wanting to do that analysis to see whether he's really balanced across his stock or stocks or what he's got.
So what do you think on this one?
But I wouldn't necessarily be selling right now. That's just my opinion, though. If it fell below that recent low, which is last week's low, then I'd probably be a little bit concerned about it. But he's got to have some good rules for a start. Is he just going to sell out of a position right now just because it's traded above? It's well above where he bought it.
Well, you don't just sell out of a position. It's always, one thing that Janine and I constantly drill into students is trade on confirmation, not speculation. Don't trade on what you think you know. Trade on what something is confirming. So that's why, we have people say, can I speculate on this? Speculating is guessing, and I'm not saying he's doing that, but you need to have a rule about why you're buying and what's the trigger to buy and what's the trigger to sell. You just don't sell something because it's going sideways a bit or just dropping away a little bit. You want to try and get out after it peaks and starts to pop down a little bit and says it's starting to go down. And right now it's just stalled a little bit, but I think it's
stalled.
Right.
It could be the peak. We don't know because there is significant resistance there, but I'd just be watching that carefully, and he's got to sort of draw the line in the sand.
Okay, well that's it for IPL.
All right, now we have a question from Stephen. Hi, Dale and Janine. I consider myself a beginning investor, only been in the market about 2 years and partway through Dale's books. I am a medium to long-term investor and have been keeping my eye on IGO, looking to make an entry, particularly after the low made on the 15th of July 2022 on the weekly chart. I have since that time been waiting for it to make a higher low before making an entry, which doesn't seem to have happened in my opinion. Was interested in your opinion as to whether I missed an opportunity or was correct in waiting out the current rise. Kind regards, Stephen.
Well, that's easy. You're correct in waiting out the current rise.
He said kind regards, isn't that nice?
He did.
It's very
He said
polite.
that to you. He would have just said, yeah, good on you, Dale.
I use that in my emails. I bet you just use regards.
No, I just use cheers. Yeah, cool. But he's right. I mean, thing is sometimes when you make a decision to wait, for a rule, it doesn't always trigger your rule. Sometimes you'll get a stock that'll just go straight up and not give you a buy rule from a trend line or other type of rule that you might actually have. And that's just it. So you're really, I'm 100% behind you. You had a rule that you wanted to see it come back and make a higher trough before you entered in the stock. So I'm 100% supportive that you stuck to your rules, regardless of what happened. And yeah, you could have jumped in and got FOMO and jumped in, and you probably may have made money now. But when you make a mistake like that, it tempts you to do it again in another stage, and that second time you might lose all your money. And so I'm 100% behind what he just did.
Okay, that's awesome.
Yeah. Anything else you want to add?
No, I think that's terrific. I actually like the stock though. I mean, it looks fantastic,
looks great,
doesn't it? We've
doesn't
talked
it?
about it on the show.
And it will come down soon, mate. It really will.
What goes up must come down, is that what you're saying?
Yeah, so that's enough for IGO, sorry. Now we've got an email from Derek who says, hi guys, my question is about Ampol. First, I bought some shares in April and top up again in August. The company trades at a reasonable PE and has a good future performance forecast. It also pays good dividends, and it is looking after its green image with EV chargers installation program. However, share price performance has been rather disappointing. Now, I have a mid to long-term plans for this stock, but it is coming close to my stop loss sell point. Please tell me what you think. Regards, Derek.
Interesting, isn't it? I mean, this is a really volatile stock at times.
It is.
It's been in a really controversial area. But when the government is granting licences, and we have seen that occur with a lot of stocks, and Ampol is in a fortunate position there, therefore you would assume that those sorts of stocks would continue to rise. And we do trade this stock from time to time.
We do, yeah.
But because of the volatility of it, we're only generally trading it short-term, medium-term, depending on what the setup's like. But right now, I can agree with what he's saying. I mean, this big sell-off that's happened a couple of weeks ago has really put a bit of a hole in the sail for this one. So it really needs to get back above this high, 26th of August 2022, to confirm that it's going up. At the moment, it's just coming back to the angle of that trend, but I'd be a bit concerned if it takes out this low that it made during that emotional week of the 2nd of September 2022.
Cool. You know something, Janine?
What's that?
I forgot. I forgot we had a special announcement this week.
You did forget.
Remember? We told everybody this week we'd have a special announcement, and no, I'm not pregnant.
Oh, really? Oh, that's a relief.
No, I'm not pregnant.
Jeez.
No, well, our special announcement is in the next, Janine and I have been working really, really hard along with the team here to launch a brand new streaming network. And what we're doing is we've been doing a truckload of video interviews with experts across the US and Australia in the areas of investing, so property, shares, superannuation, managed funds, retirement, you name it, both, as I said, both here in Australia and the US, health, we're talking about business, we've talked to so many entrepreneurs, people in sales, marketing, you name it, and to help people who either want to set up businesses and grow businesses or manage staff better. We've had publishers who we're talking about how to write books and how you can get into the book, and because a lot of people want to write books. There are so many people we're chatting with, and we're this close to launching, but I really did hope we could launch today, but I can't give you the launch date at the moment, but it's really, really close. But we also be giving away we're having a competition to give away $50,000.
Wow, everyone's going to be excited about that.
So they're all jumping up and down in their chairs going, go Dale and Janine. So as I said, it's really, really close, and we'll let you know. So those people on our database, you know, who get our e-news and everything else, you'll get a mail out to tell us exactly, or tell you exactly when we launch. But I know you're going to be excited about what we're doing.
So what if they're not on the database?
Well, they need to subscribe to the database. Get online and go and ask for some information, which they should already be already, you know. If they're interested in the stock market, they should already have
getting
my
our
book.
newsletter.
If they haven't bought my book, they should. And that'll put them on the database, and then they'll get our e-news and they'll be able to know when it's going on.
Awesome.
So how's that? So hopefully next week I'll have some super fantastic announcement for you. It'll be on Apple TV, iOS, Android, Roku TV, Amazon Fire TV, and I think I said all of them, haven't I?
Yeah, I think you've just about covered.
Everything on the planet, it'll be on. That's for sure. So, but we do need to get into our next question, Janine.
I think they're all excited now.
I am.
Now we've got a question from Max. Hi, Janine and Dale. Just got your books and enjoyed the simple and straightforward writing style. Well done, Dale. Could you please have a look at SXE for me? I bought it at 55 cents and the stock is moving up little by little. It pays a good dividend of 5 cents for the year and have announced a full order book for the years ahead. Is it ready for a takeoff and a further buy? For me, it looks like it is ready for a takeover or a sharp upturn. Regards, Max. Thank you for your question, Max. Let's get into the chart.
It's already had a sharp turn.
All right, so what do you think?
It's going up.
And he bought it 55 cents, and I'm not sure, I don't think there was a date there, so we're not sure about that. It looks lovely, doesn't it?
But it does look lovely. It's going up, so I'm not sure why he's talking about it having its turn to move up. It already is moving up. It's looking great.
Yeah, so perhaps he's just saying that because last month is really the first sign that it started to move up, he might be looking big picture.
Would you be adding to that position right now?
It would depend on how you're positioned for a start. That would be the first point, but I probably wouldn't at this point.
No,
that would just be my opinion on
it looks great. I just make sure I've got a stop loss on it, but it looks really, really good to me. It looks like it's going to continue to go up.
Looking at
it's going to have some resistance soon.
Yeah, it's still got another 10% or so to the high.
So I wouldn't be adding before it got through that at least. Anyway, but that is our thoughts on SXE.
Now, you've been asking us questions, and each week we ask you for your thoughts. Last week, we asked, what is the long-term goal of your portfolio? In other words, what is the purpose of your portfolio? And if you achieve your goal, how would it change your life? We like the answer from Martin Boyles. My long-term goal that I have already achieved, thankfully, is continuous cash flow from dividends monthly. Thank you so much, Martin, for sharing this with us. We want to give you a couple of gold stars. 1 for answering the question, 2 because you have a goal, and 3 because you've already put it into play and we're receiving the benefits from this. So we do have something, though, to share with you and with all viewers when setting your financial goals. The little secret we want to share, which will increase your chances of achieving the outcome that you want, is because the most important thing is not the money. So don't kid yourself. It's the difference money has made to your life that matters most. So we want to encourage you to grab a pen and paper right now and clearly document your why.
Oh yes, so many people don't do that. And I know that's the very, very first thing. If you do on our Trading Mentor program, which is our beginner one, the first thing I get you to do is write out your why, because without why, what and how doesn't make any difference. Because why is what the goal will bring to you when you finally have it, and describe your life. Once you have this long-term goal, then in one sentence, you really do need to document your goal to get your why. And if you have decided to take the step to get you closer to achieving all of your financial goals, by start the learning process with enrolling us in one of our educational courses. And as I've said a few times, Trading Mentor is like cheap, dirt cheap. If you can't afford it, you shouldn't be trading.
Well, the amazing thing is that they get you, isn't it?
Absolutely. Every single email I answer. I mean, I'm worth this fee on its own.
I know. Thank you for sharing, and to everyone who joined in and commented. We so enjoy reading your comments and after the show, so keep them coming. This week's question we're up to now is, what is your opinion on short-term selling, and were you aware that your super fund may be lending out stock to hedge funds and other financial institutions to sell, which could cause the price to fall? And we want to know, would you like to know how short selling works and how it can impact your savings, particularly when there's a market decline? We are contemplating this as a future topic, and it would help greatly if you share your opinion now. Come on everyone, we're waiting for you. Join in and get typing. Please write your answer below this video in the comments section. If you are listening to us on a podcast, you can still send us an email with your answer. Before you do, give us a 5-star rating and review on whatever podcasting app that you're using.
Okay, if you've enjoyed tonight's show, give the teams a really big thumbs up. That means click that little button underneath it with the thumb on it and on our video to let us know that you've really enjoyed the show.
If you want us to answer your questions, then watch our show next Tuesday between 7 and 8 p.m. Pick up the phone and give us a call, as we'd love to chat with you. If you're not able to watch live, you can email your question ahead of the show. You do this by sending your email to info@wealthwithin.com.au, and remember to include Wealth Within Live in that subject line.
We really appreciate your support, and you can show yours by subscribing to our channel and hitting that subscribe button now.
Well, that is it for tonight's show. We do hope you enjoyed what we presented tonight. We've so enjoyed receiving all your emails and thank those who called into the show. We love the opportunity to chat with you personally.
As always, thank you for joining us, and we hope you have a great week. But for now, goodbye, good luck and good trading.
Bye for now.